Welcome to this weekly update for October 28th, 2022. Welcome back. We've had a great week, actually. I'm really excited to talk about this week because there's a lot of good stuff. We're in a green market. Things are moving up. The Fed's probably going to pivot or at least soften their stance, at least at some point. That's what the market's telling us. Let's take a look at what's going on. Let me share my screen and give you an update about what's happening. But I want to start off by showing you my favorite let's see, let's go right here. My favorite motivational speaker. And maybe you'll get this, maybe you won't.
Have you ever had a dream that you want him to do you so much you could do anything?
Right? Like that's a motivational speaker in the making, right? He's inspiring. Anyway, I hope you had an inspiring week. I always have a little bit of fun with these things. Anyway, we are in a green market. You can see the screen shows you right there. We got 4 green lights. That means all systems are go. It's a good time to be buying because now you have the probabilities in your favor. And you know, I always talk about probabilities. So you want the wind to be at your back if you're in a sailboat, right? You don't want to sail into the wind. You have to tack back and forth to be sailing into the wind. And so when you get these green markets, you like to be in good stocks. We always talk about being in the right stock, in the right market, which we have now. Buying it at the right spot on the chart's very important for higher probabilities. And then what we do in our system is we collect income, we collect rent, we squeeze the juice, we collect the rent, we get the time premium in our system called the cash flow machine. So we're really now prime in a prime spot to be buying things and having the wind in our favor. And that probabilities doesn't mean it's going to go up. It's a probability, not a guarantee, right? There's a big difference, but we want to have those probabilities skewed in our favor. And so we got a green market. We've got over, you can look at this bear market on your screen, right? It's from higher left to lower right. That's not what we like to see. Everything's kind of moving down. However, we have a bear market rally or a legitimate rally. We don't know until after the fact, like Stephen Jobs said. You can only connect the dots after the fact, right? After they've been drawn. So that's what we've got here on the screen. We're below the 200-day moving average on the NASDAQ. It's weak. A lot of stocks like last night, Amazon missed numbers. Apple was down a lot last night, but it's really gone up quite a bit today. So it didn't miss numbers. It actually beat numbers. They had a couple of warnings about some supply chain and other stuff that to me was pretty minimal. But you're seeing Meta or Facebook get hammered. You're seeing Google get hammered. So that's why they're weighing on the NASDAQ, which is a heavily tech-laden composite index. Okay, so the NASDAQ is down. But the other ones, as I start to show you, you'll see, are really nicely up. So look at this S&P 500. The S&P 500 is above the 50-day moving average. That's awesome. Good things happen, I always say, above the 50-day moving average, and bad things happen below. And you can just look at the last 3 or 4 weeks. Not a lot of great stuff has been happening below the 50-day moving average, but hopefully maybe we get a little spike above the 50. That's that red line in front of you, and we get some bounces here. So the S&P 500 looks good above its 50. Look at the Dow, though. The Dow is just tearing it up. That means the big industrial companies like Caterpillar and Ford and GM and Walmart and the big 30 industrial companies are moving up, and that's not an insignificant move up. There's like 6 days in a row of move up to the 200-day moving average. And that's good. Boy, we needed to have a real result above the 200-day moving average. That may act as a bounce, like a ceiling, or if it stays above it for a few days or weeks, we could get some support out of it. We'll see how that goes. But right now, the Dow is leading, and the Dow is leading all the other indexes. And therefore, the New York Stock Exchange Composite Index, you can see it's acting in a very similar fashion, not quite as strong because it's got a large breadth of stocks, and we're still in an economic slowdown. Doesn't matter how you slice it. Are we coming out of it? I don't know. We'll see. The Fed certainly seems like we have to do something to come out of it. Otherwise, we're in big trouble. The Fed is causing a big trouble, and they're overshooting. They're really good at overshooting on both sides, raising rates and lowering rates. Right now, they're in the raising rates thing, which is causing interest rates to go up. They're trying to tame this inflation beast, but it's not working. Like they're printing money behind the scenes. I can get into that on a different video, but they're doing all kinds of crazy stuff. So inflation's going up. The government wants to spend more, which is inflationary. And then they're saying, well, we're going to raise rates to bring inflation down. It's not working. and they're breaking the markets in the meantime. You're seeing it happen all over the world. The Fed is breaking the yen. The Fed is breaking the British pound. The Fed is breaking the euro. Everybody's having trouble because our dollar is strengthening because we're raising rates, and we're the strongest. We're the cleanest shirt in the dirty laundry. How about that? So, but anyway, back to the New York, you can see it's above the 50. So that's good. And we've had a good 5 or 6 days behind it. I love it. And then the Dow Transport, if you remember last week, if you tuned in, I said, that's the only index that's not really doing well. And that usually leads the Dow. Well, sure enough, it's really come the other way. And it's now 5 days in a row making a higher high. And so that's pretty good for the market. We're on the way back up. Still not out of the woods. Still need to be over that 200-day moving average, but at least it's over the 50. All right. The volatility index of the S&P 500, you can see, boy, look at the move right back down to the mean. This is one of those mean reversion indexes, and it came right back down to the mean. And the lower that volatility goes, the more the market is kind of like happy, right? So as the market gets happier, things go higher, and that means volatility is getting lower. And it just, more people start to get involved in the market when it's not so scary and not so volatile. And then taking a look at Apple, Apple had numbers last night. They beat the street on revenues. They beat the street on earnings. They're selling tons of phones. They're selling fewer of the little lower end phones than they are the new iPhone 14 Pros and Pro Maxes. So they're moving their production to the Pro Maxes. They're a little worried about what's going on in China, cutting prices. I don't know what's going on, but bottom line is they're selling more iPhones, I think. This is a great company. They keep doing lots of great things, and that's why the stock is up $12 today. Overnight, it was down like $10 or something like that. But today, it's up about $12, $13 at about 155, 156, hit 157 today. Unbelievable what's happening in Apple. So it's recovering off the bottom. You can see it hit a low a few weeks ago of 134, and now it's already at 157, 158. That's, 20 points on a $130 stock. That's not too shabby. So you want to be in Apple if you like iPhones, if you like their infrastructure, and if you like to make money in their stock, if that's for you. And this is fun and entertainment. It's not advice. You want advice, go see a financial advisor or whatever and get whatever they have to say. I'm just telling you, the chart is looking bullish on Apple, and I've said it for a couple of weeks. It's recovering off that bottom, and they're doing lots of really great stuff at their company. Tesla had numbers last week, and I want to just point out on the screen a couple of things that are significant. There's a couple of gaps still left on the screen that, I think it's a 234 and 262. Those are those two little lines there on that chart that show you where the gaps are. And I always say gaps get filled. And so that's where I think there's a magnet pulling Tesla. Now, I have no guarantees. I'm just a probability guy. So if I can get a little bit on my side from 50% to 51, 52, and ease those probabilities up in my favor, I got a better chance of making money. I don't have a guarantee of making money. I got a probability of making money. And that's what I like to see, is probabilities on making money. All right, that's enough for today. I just want to tell you that we're in a green market. And as people in a green market, we like to buy things. And when we like to buy things, we want to buy them when the market is absolutely in our favor. And so I'm hoping that the market's in our favor. And I'm hoping you have a fantastic week, and I'll see you next time. Take care.